Hello everyone, welcome to my YouTube channel. My name is Francis and I am a smart money trader. I know it's been a while since I did a YouTube video, but this particular video is just to explain the price action as to what happened on EUR JPY and GBP JPY. Hopefully you learned something new from this particular video. Thank you for watching. If you haven't subscribed yet, please hit the subscribe button. And you can also press the bell, just in case I post a new video, you'll be the first person to have a view of it. Thank you very much for watching once again. All right, I head straight back into the video. Regarding, I'm gonna start doing on British pounds and Japanese yen today. Then I head towards Euro, Japanese yen. So first and foremost, you have to understand the kind of structure you're in and what price was really doing prior to today. If you look at the chart right now, there's been several areas that I've marked out showing significant and important things on the chart. You might understand it if you've already been on my YouTube channel for a bit, or you might not understand it if you don't know anything at all about smart money concept. So literally everywhere you see this particular line is where retail traders are taking advantage of the institutional move and feeling comfortable that they are in the market and also making a vast majority of people move the market. Don't get me wrong, whatever strategy you trade, depending on how you trade it, if you have a set rules that you follow and you follow strictly, then you're capable of making that particular strategy work for you. But with me particularly, I trade smart money concept, and that is what I'm going to talk about. So in this scenario, you see this particular trend line where price comes down, bounced off at 1, it moves up, bounced off at 2, it moves up, bounced off at 3, it moves up. This particular area is termed as a liquidity pool. Once again, if we look around here, we'll plot the market structure, and we saw another form of price action, moved down 1, moved down 2, moved down 3, and then we saw another rally and then a break on market structure. Now, if I look at how fast the candles moved away from this area compared to how fast the candles moved back into this very region, you can clearly see that the intent of this market was to push the price higher and not further down. What's the confirmation? How do I know that the intent was upside rather than downside? You already know the trend. Liquidity got taken around this area, break on market structure, pull down, break on market structure, rally up, break on market structure, rally up. The intent was already clear, but then the form of candle formation, look around here, very solid candle formation. Look around here, very solid candle formation. In the sell scenario, also look around here, very solid sell candle formation. It shows and gives you a clear intent as to where they really want to push the market to. Once again, they made it clear around this region. Nice liquidity pools surrounding here, but then the question is there an intent to push the price higher or lower? Right? Now, looking at this particular chart right here, you can clearly see that the intent was clearly to push it continuously higher. After we broke the market structure over here, let's label this as US. On the top side, nicely to the top. And what do we do in smart money trading? What we say is we pull our fib from there, the last low, to the top, and we take our entries between the 50% and 79% area. The 50% and 79% area, which is the optimum trade entry regions, right? So you can clearly see the picture that was being given to us as price was rallying down. The speed of the candle formation to the downside was pretty much very slow. Comes down a little bit, rally up, comes down a little bit, rally up, comes down a little bit, rally up, giving us a clear intention as to what price action was really showing us. So prior to today, last week, we saw a clean price action when price came all the way into the zone. If I shift down to the 2-hour time frame, you clearly see what I'm trying to say. Nicely, the intention of the sell, the last sell before the buy happened, this particular area is the intention, is the area we actually focusing our attention on. I mean, this from this last sell candle all the way here, right? So if I should pull my fib and mark all the sell to the bottom and place a line to the 50% of that line, right there, you can clearly see how clean that was onto the line. Let's change it, make it a lot tighter. See how clean that was to the 50% of it. So the main purpose of what they were trying to do was to trade back into that sell to buy, and then they can continue on up. Now, we got that intention clear over here. The question is, what happened today? Woke up in the morning and once again, you came to see that price has given you a clear intention here. For me to know that the higher time frame will support my smaller time frame entry and the clear break of market structure away from this zone. So you zoom in and you go to the 45 minutes time frame. And on the 45 minutes time frame, prior to taking the trade also, you need to be aware of the fact that your area where you want to take your profit should have enough liquidity sitting there. If you don't have liquidity in an area where you're thinking of taking your profit, then guess what? The area, assuming you're taking a buy from here and you have lots of liquidity sitting down here compared to lots of liquidity sitting out there, the question is, there is more probability that price will actually eat into your profit in the end, giving you a loss and rallying in the direction against where you intend to go. And it's as simple as that. The main reason is, you can clearly see we had lots of manipulation around here, drop down and up. We run the liquidity drop down and up. We run the liquidity drop down and up. We run liquidity drop down and up. So all this area, area 1, let's put some numbers to it. Area 1, area 2, area 3, finally area 4. Above this region, clearly for liquidity pools sitting right there. Not forgetting about this area, giving us another area 1, area 2, as we began touching that particular trend line where retail traders are taking advantage of the institutional moves. Area 3. You can see clearly everything was pointing out that the amount of liquidity sitting up here is crazy. Right? We touched here on the trend line, we dropped. We touched here on the trend line, we dropped. How long do you think institutions are going to allow this particular form of trading to go on? Not long, not long. So already we understood the institutional basis from here. The sell down into this particular region, and clearly on the 45 minutes, you can actually see a clear demand area over here. A rally, base, and then a rally. So this region confirming the higher time frame 50% mark that are marked lining up right inside the demand area, right? Price dropped into it. What do we see? A clear Wyckoff schematic. Clear Wyckoff schematic. Our PS So climax, automatic reaction, ST, ST, and then our spring nicely falling within the particular demand region we saw on a higher time frame. We roll it up, and what happened? Nice clear break of market structure. We're going to label this POS. The intention was clear. Once again, what do we see here? A drop, a base, and then a rally. A drop, a base, and a rally, another demand area. Not forgetting that that particular last sell candle, the last sell candle that dropped down here, if we flip the 50% of that last sell candle, the top to the bottom, clearly you can see the intention as to what they were doing. Right there, onto that 50% once again, a sell to buy candle, a sell to buy candle, dropped into it, broke market structure, nicely giving you the intention. Look at how fast price moved away from here compared to how slow price was coming back down. A nice confirmation telling you that this particular demand area is going to hold more compared to any other area you're looking at. Now, the intentions are clear and clean. Slow back down to probably 30 minutes. We might be able to scale in even better. On the 30 minutes, you can clearly see our last sell candle right here, our last sell candle before the buy. So if I move this right down onto the close of that last sell, the open of that last sell candle, you can see we can keep our stop loss below the last low right here. And then our first target will be here. Our second target will be here. Third target will be there, and our fourth target will be there. So you can clearly see the intention of the market as to why they were looking to move price higher. This is how our two GBP JPY trade today. First target already hit 1 to 10. 1 to 10, simple as that in one day. And literally everybody else can do the same. Everybody else can do the same. It was that simple. Simple and straightforward to get into this particular trade. I'm still currently in that trade if you're wondering. If you go in my I think I shared this with my WhatsApp group right there. And that was the entry right there. Clearly on the 1 hour, there is also an institutional candlestick saying right there. Took 2 entries on it, and really clearly, this is the trades that I took myself. And just to show you, just to make you aware, I'm not just talking about past information, I'm talking about things that I've taken myself, so I know how they actually work. How they actually work. I hope this is so far good on GBP JPY. Then I am going to shift straight to EUR JPY. Once again, in EUR JPY, let's look at the higher time frame perspective and see what was actually going on. From the higher time frame perspective, we can clearly see we were constantly rallying up. Even on a daily time frame, you can clearly see rally, nicely rallying up throughout, right? The most important thing around this area is if you look, the price action from here Nice imbalance falling into this region, a rally down, and continuation up, a rally down, and continuation up. When we rallied up around this area on the daily time frame, we broke the market structure, dropped down, but not deep enough into this particular candle. At least you need a minimum 50% into your base candle, which is the order block, institutional candle. You need at least 50% into that particular candle as steep as possible. So if you look at the 4-hour time frame, inside that same area, institutional candlestick sitting right there. The main purpose of this particular institutional candlestick, it was the last sell move that caused all this move. For the fact that we never came back to this particular candle gives us the intent of institutional order flow that we probably visit back then. Once again, look around here. In the future, you're going to see how price reacts around this area. And the main reason is we drop down the last sell candle before the rally up. We never visited it. That is another thing for the future. But for now, let's pay attention to this last sell candle before price did this rallying up. Now, if I should put a box around this, it's for institutional candlestick. That is my higher time frame perspective. The conditions are clear. Break or market structure. There. Another break or market structure there, making it even more palatable, taking trades away from this region. All right. Now look at how fast price moved away from this region. Look at the type of candle formation, how big they were nicely, showing you the intent of the direction of the market. And look here, up one day, the next minute down, up, the next minute down. It's telling you clearly there was some sort of struggle, not a proper institutional backing to bring price down to that particular area. This is where we are inducing more retail traders. If you look around here, clearly the intention was so clear. Inducing retail traders in believing that they're in the right trend, right? Induce retail traders. We take price up, sweep some of them out, and then we drop. That's the main purpose of this sort of trading, inducing retail traders. This is a form of liquidity also, right? A form of liquidity also. So pay attention to what prices trade in this sort of way. Now, price serves as an internal liquidity. We use this particular area as an internal liquidity. I believe last week or two, we rallied down around this region, and then we saw price quickly run up. And the question is, there was a break of market structure here, Francis. If I go in the low time frame, why then am I not taking a buy from this area? That's the question you're probably asking, right? Why then there is a break of market structure here? Why then am I not taking a buy? Because there is a clear intent to bring price away from this region. Look at how big the candles are. Nice institutional candlestick sitting here, and nice liquidity graph sitting here. Yet you are not looking to take a buy from here, instead further down. The main reason was, I always say this in my videos, before you take a trade, look where price is coming from. And if we look around here, what's the intention here? Nice stop hand set up. So we stop hunted. We stop hunted all the people who were chasing this little buy on a smaller time frame. Right? Everybody who was looking into joining that particular buy, why they see the intent, clear intent. And that is why I most of the time say, please, please, please bear with me and understand the story behind every single trade. Now, what do you see here? A nice break on market structure. After the stop hat, what happened? The last buy with a big sell candle showing the intent of price dropping down. Price came right there and gave us the clean sell. If you pull your faith from the top to the bottom, you clearly see what are we? 50%, 79%. Always the same as well. 50%, 79%. Clearly into that region, we had a clear point of interest. Price came down into it and nicely dropped down. Hence why I wouldn't look to take my entry of this region. Now, price entered the area we saw on the 4-hour time frame. Just like I did with GJ, you can fib this region. You might be 50% of that particular region as a point of interest of your higher time frame, just to cut the risk that you're willing to take. Right? Now you can see as price was reaching that area, it gave us a clean Y curve, another schematic. Right? Once again, PS, which I was watching and following keenly. So climax. Schematic reaction. ST. Nicely. Now the spring. The spring didn't quite get into the area I was actually looking at 50%. The spring didn't quite get into it. But please, as far as you got the right intention of the market and understand where price is moving, you still have the opportunity to enter the market, right? So I'm going to drop down to the 15 minutes and show you what exactly happened. Stop hunted supply notes and what happened? A clean break on market structure. This is to confirm to you the schematic is completed. Sign of trend, how big the candles are telling you we want to go up, we want to go up. Now look, the last sell candle, inside that last sell candle is where you're taking your trade from. So right here, we had a clean entry from the close. Sorry, the open to the last sell candle. Now this becomes our trade. We enter from here. Now stop loss below the spring. And the clear intention. Where are we targeting? Like I said on GJ, lots of liquidity pools giving us the intent. We have liquidity pool here, but remember, we run a little bit of that liquidity. So my main target is this particular region, the last area. We took the sell to buy. The sell to buy becomes your first target area. And that is a 125.4 simple. You know around here, this is where the stop price actually happened. So most probably, I am looking maximum. We can come back to this particular supply area, at least 1 to 7, before I want to see price starting to run down again. On GBP, what you call it, GBP. What am I saying? On EUR JPY. I hope this is properly explained, everyone. If you have any questions, please leave me in the chat box, and then I'll make sure I'll respond to you. We clean it up nicely. No, I can't get rid of this thing. Well, I can't get rid of it. But yeah, you can clearly see exactly what the price actually gave us today. And that is how I took Euro JPY as well. Having taken a screenshot of this particular trade here, it was a trade I called this morning. What was it? One of my table groups. After that, my Euro JPY went out this morning, really right there with the stop loss and the entry target, everything there. And now you can see how well we got today. This brings me to the end of the video. If you have any questions, like I said, please feel free to put it in the comment box, and then I'll try and respond to you ASAP. Thank you for watching the video. See you in my next episode.